Hello everyone, we are Symetrics. In this video, I would like to analyze Bitcoin under different scenarios, and our analysis is based on the software SyMath. Basically, in SyMath, you can easily analyze your portfolios or assets under different scenarios. And as you can see, here is the starting section inputs in SyMath. So in this section, you should select your portfolio scenario and then click the button. You can run scenario and see our results. Because we want to analyze Bitcoin, so let's first select the portfolio Bitcoin. We already prepared the Bitcoin portfolio for you, and in this portfolio, we only have Bitcoin, okay? And in this video, we want to select several different scenarios. So let's start with the scenario high inflation. So in this scenario, the EU and the US increase the inflation, and then the European Central Bank and the Federal Reserve Bank attempt to rein in inflation by increasing policy rates. So click the button, we will see the results under this scenario. Okay, so here is basically the result for the portfolio Bitcoin under the scenario high inflation. And in this video, we will mainly look at the figure A. So figure A gives the compounded return differences for Bitcoin under the scenario high inflation and the normal scenario. Okay, more precisely, from the figure A, you can see that Bitcoin has a higher compounded return under the selected scenario. Okay, so it means that Bitcoin could be an inflation hedge from this result. Now we go back and select another scenario. Let's choose the scenario recovery. So this scenario is a positive economic scenario, and in this scenario we improve the US and EU industrial production. So we will see that in this scenario, Bitcoin has a higher compounded return, okay, than the normal scenario. And this means that Bitcoin performs well in some good economic circumstances. And now let's go back and choose some negative economic scenario, muddling through. So in this scenario, we decrease the US and EU industrial production, and let's see what will happen. So you see that under this scenario, Bitcoin has a lower compounded return than normal scenario. So it seems that Bitcoin also performs badly in bad economic circumstances. Okay, finally, let's have a look at the scenario oil price recovery. So in this scenario, the oil price moves to $75 in 12 months. And from the results, you can see that the compounded return differences are very small. So it seems that Bitcoin is not related with the oil price movement. Okay, so this is what we basically want to show you in this video. Thank you very much.